Let's get a check now, though, on how bond markets are reacting with Michell from FIIG Securities. Simon, great to have your company.
Good afternoon.
Just mentioning there that China PMI data really smashing through expectations. What do you make of it and, I guess, the Aussie dollar reaction to it?
Look, it has, obviously better than expected. Look, we know that the Chinese have been looking to support a growth target of around 7.5%. So they have been working behind the scenes there just to build that strength in there. So this is obviously along those lines. I think the market obviously likes that it offsets a few other areas of concern in relation to iron ore pricing and what forth. So I think it's obviously a bit of a positive, and look, in this week for the Australian market, which is a little bereft of news, it's a positive data to end on.
Just seems onwards and upwards for the Aussie dollar, though. Obviously, last week we saw the FOMC commentary, I guess Janet Yellen's commentary, really saying rates look like they're going to stay steady there for longer, rate hike looking further away. Some would say slightly dovish comments by Janet Yellen. So, you know, when's the downside catalyst for the Aussie?
Yeah, look, that's interesting, isn't it? And I think we've also seen a bit of a turnaround where the Aussie's actually benefiting from as a bit of a safe haven currency as well. Obviously, our yields are very attractive globally as well, as the strength of our economy. So, you know, that's a bit of an issue for the RBA, and one obviously that they've been focused on for a few months now. But look, I think while we get this positive news out of China, while our economy is, you know, transitioning within limits, you know, I think it's going to be very difficult for the RBA to try and talk that dollar down.
The sort of demand, though, going back to the US, and I guess we saw their inflation numbers the other day, going back to that, strong demand for US Treasury-inflated, inflation-linked bonds. How is this kind of signalling, I guess, where the inflation rate is going there in the US and the levels of concern?
Yeah, look, it obviously shows that markets are concerned about what we are seeing as rising inflation there. You will tend to get inflation increasing in a lead up to higher rates. So, you know, people are focused on when that might emerge, given that Yellen's sesame last week was very much about keeping on message that rates will be low. They'll be low for a long period of time. They don't want to really talk about rates moving higher, but the market is. And we saw this tender last week of US inflation indexed treasuries. Very, very well bid. Quite a strong bid, about 2.8 times overbid for the stock. So that's a very strong sign that the market are looking to build in inflation protection. We've been, I suppose, pushing that theme here in Australia for about the last couple of years. In a low rate environment as we have at the moment, you really need to have some inflation protection, because as that inflation increases, it does take away a lot of your yield.
Simon, anything we're watching this week? It's pretty quiet on the economic front. Anything in the US or Australia we're watching?
Look, it is very quiet. Obviously, the China was one that we wanted to get out of the way, and that's been a positive one, so that's great. Out of the US, they're a little bit quiet, obviously, at the moment, a little bit on the consumer side. But I think there'll be a lot of rebalancing and repositioning, you know, a lot of cash looking for a position prior to the 30 June for end of financial year this time next week.
All right. Simon Michell from FIIG, thanks so much for joining us.
Have a good day.
Well, the Abbott government will reintroduce its carbon tax repeal.